Good day everyone, especially to you sir. We are the group 9 entitled Principles of Deduction. So I am the first reporter. My name is Angelica Trelio. Deduction from gross income pertains to business incurred by a taxpayer engaged in business or engaged in the practice of profession. So what is a business? Business means habitual engagement in a commercial activity involving the regular sale of goods and services to a customer. In taxation, the term business is generally used to include the exercise of the profession. Self-employment is a business, but employment is not a business. So when we say business, kanang mao ni kanang magastos tag kwarta aron makabaligya ta og products for us na maka-income ta. Kung self-employment ta naatay business pero og nagtrabaho ra ta di ta matawag og business. So business expense versus personal. So expense business are cost of doing trade, business, or practice of profession on such employees' salaries, office supplies, rent, taxes, dues, bad debt, depreciation on business properties, research, development, and the likes. Personal expenses include the living and family expenses of individual taxpayers such as family, food, personal recreation and transportation, medications, homes, rentals, and utilities, tuition fees, and other similar expenses. Separate business and personal expenses. So business expense mao ni ganang magasto nato to buy and sell products, whereas ang personal expense mao nang expenses nato sa personal like foods, dress, rent, and etc. So separate business and personal expenses. The separation of the business expense and the personal expenses of an individual income taxpayer is important because only business expenses are deductible. So dapat magsita nga dapat ilahi nato ang atoang business expense sa personal expense para ma-manage nato ang atoang kwarta. So the 200,000, 50,000 annual income exemption in the taxable tax table for individuals is demand in law of the personal expenses of an individual taxpayers. Hence, personal expenses are non-deductible. The next is business expense versus business capital expenditure. So business expense benefit only the current accounting period. These are costs of generating or gains for the current period, hence these are deductible against gross income in the current period. So business expense are deductible. So meaning, mabawasan ang gross income against current period. And the salaries and wages expense. Utilities expense, electricity, telephone, internet, gas, and water. So selling expense, delivery, and commission expense. So rent. Local taxes are permits. So this is and the next is business capital expenditure. So our expense, the benefit future accounting period, these are initially recorded as assets upon acquisition, then later deduction against future gross income when used in the trade, business, or profession of the taxpayer. The advance deduction of capital expenditures is not warranted as it contradicts the lifeblood doctrine. So business capital is kanang maka-benefit tag dako in the future. So accounting period kay mas dako man og profit pag mabaligyan na nato ang mga products. The next is items of PPE used in the business. So the first is land use currently or intended to be used in the business. Depreciable properties, land improvements such as fences, benches, and roads, building improvements such as installed escalator or elevator, machineries and equipments, leasehold improvements. And inventory. Inventory includes merchandise intended for sale. It may also include tools and supplies used by the taxpayer in his business. So much better na mag-create tag inventory for us to know to For us to know the movement of our products, it's follows. And investments, assets purchased which are intended to earn from appreciation in value or accrual of income such as dividends and interest. So, like for example, land held for the appreciation in value, stocks, bonds, and other securities of another company. So one of the example of business is land, tungod kay magkadugay magkataas man pod ang value sa lupa as time goes by. So prepayments, acquisition of intangible assets, patent, or franchise, including cost of defending the same court, or the acquisition of intangible assets such as patents and franchise, constitute capital expenditure that must be amortized, deducted over the period they are expected to be used. Expenses to promote the business, goodwill, expenses incurred to create or maintain some form of goodwill for the taxpayers or trade or business for the industry or professions of which the taxpayer is a member are non-deductible. So as a business goodwill, so dapat we create goodwill for the taxpayer, trade or business industry which the taxpayer member is dili sila ginadidakan sa ilang tax. And the next is the term goodwill is used generally to denote the benefit arising from the connection and reputation in the business, effort to establish reputation and related to acquisition of capital asset, and therefore expenses related to it are not because expenses but capital expenditure. So to be a good business, to be a good in the business reputation industry, so dapat kabalo ta magtrato og tama sa atong mga trabahante to establish reputation related to acquisition of capital asset. And the next is rental on capital lease or finance leases. The transfer ownership, commonly known as rent-to-own arrangements, are not considered expense. So the rentals constitute acquisition cost of the leased property that should be initially capitalized. So rent to own is dili siya considered as expense because the movement that mabaydan na nimo tanan ang kinahanglan nga ibayad is maimo na dayon ang girintahan nimo. And next is the capitalized cost shall be depreciated throughout useful life of property. The rental payments can be considered as expenses for tax purposes. So but the rental as payments pwede siya ma-considered for for tax purposes. Pwede siya ma-considered for tax purposes. So there are the two types of rules on deducting capital. The first is non-depreciable and the second is the depreciable properties. So non-depreciable, the cost of assets that do not depreciate by usage or by passage of time, such as land, is deducted against the selling price when sold. So when we say non-depreciable, mauning ka ng mga asset nga useful siya, nga magamit siya maintain, dili siya mawadan og value ug dili pod magbaba ang iyahang price. Although kung magbaba ang iyang price is nakadepende ra sa magbaligya kung still useful gihapon siya. And the land's asset is not depreciated because it is considered to have an infinite useful life. So ang lupa is, di ba, ang lupa is infinite useful life tungod kay dili siya madaot. So, like examples of non-depreciable asset is land, money. So current assets such as cash on hand, so receivables, investments such as stocks and bonds. And the second is depreciable properties. The depreciable cost or the acquisition cost net of expected salvage value is allocated as deduction over the useful life in the property. The useful life of the property is the length of time it is expected to be serviceable or its legal life, if applicable, whichever is lower. Depreciable property is mao ni ang mga butang nga sa sugod ra maayo og useful so pagkadugayan is pwede siya madaot o di na magamit, like for example washing machine. So after so many years mababa na ang iyahang value tungod sa kadugayan niya og pwede pud siya nga di na magamit. And the next is straight line method. The depreciable cost is simply spread equally over the useful life. The annual depreciation expense is computed as acquisition cost, salvage value, useful life in years. So as what I have said a while ago, so after many years mababa na ang iyahang value. So mabaligyan nimo siya in a salvage cost. So meaning mas mabarato na siya, but ang importante is napahimustulan nimo. And alternatively, the straight line depreciation rate may be computed as a fraction of 1 over the useful life in years. The depreciation rate is multiplied to the depreciable cost of the property to arrive at depreciation expense. The straight line method is very common and the simplest method of calculating the depreciation expense. So, muna siya ang illustration. So, on January 1, 2021, a taxpayers acquired a 6 million pesos building with 1 million pesos salvage valued at the end of its 5 expected useful life. So ang kani muragi kuan lang ni siya no gi ang 6 million is gimaynusan lang siya 1 million, so man siya ang na 5 million na siya. Sum of the year's digit method, the depreciation charge is computed as a fraction of the remaining useful life over the total of the annual remaining useful life of the asset. So, yung yun na siya pag-compute as a fraction of the remaining useful life over the annual life of the asset. So, yun na siya, no? So, muna siyang illustration. A taxpayer bought a machine for 120,000 pesos. The machine is expected to be sold 20,000 pesos net of selling expense after its 4-year estimated useful life. The depreciable cost is 100,000 computed as 120,000 pesos minus 20,000 pesos. So, giminus ra siya. So, the divisor is first determined as the sum of the annual remaining useful life. So, man siya. Hence, 4 plus 3 plus 2 plus 1 is equal to 10. So, ikaw na siya no, gi-add lang. Declining balance method. A declining rate not exceeding double of the straight line rate is applied to the book value of the property. For every period, depreciation expense is computed by multiplying the depreciation rate to the declining book value of the property. The salvage value is initially ignored in computing depreciation expense but is considered in the terminal year of the property. So in every period of depreciation expense, pag compute na to is i-multiply ang depreciation rate to the declining book of the value of the property. So i-ignore na to, so ignore sa nimo diri ang salvage value o kung unsa nimo siya nga price ibaligya. The 150% declining balance and the double declining balance are more common in practice. Under the 150% declining rate and double declining rate, the depreciation rate is determined by multiplying the straight line rate by 150% and 200% respectively. So disposal of properties before full depreciation. If the property is disposed of before it gets fully depreciated, its book value is deducted against the selling price. The difference is either a gain or loss. If the property is destroyed, its book value is recognized as an ordinary loss. The third is intangible assets. Amortizable intangible assets, or those that lose their value over time, should be expensed over their legal life or expected usage life, whichever is lower. Intangible assets shall not be amortized when it does not lose their value, such as franchise of public utility vehicles. So intangible assets mauning kanang mawala ang iyang value over time. As to expected usage lifespan lang iyang makover. So whichever is lower na iyang value magkadugay, but intangible assets should not be amortized o walaon kung dili mawala ang iyang value, like kanang mga jeep, mga cars, and other vehicles, and etc. The fourth is inventory. For goods, inventory, and supplies, their costs are deducted when sold or used in the business using inventory method or the specific identification method with the aid of the point of sale POS machine. The cost of goods sold shall be computed using the formula. So, it is very much important na kabaluta mag-compute sa inventory para makabaluta kung nibaba na ba ang atong sales or unsa na nga mga months ang hinayang atong masel. Sama siyang beginning inventory ni add net for kanigi ko ano man sila.